Hi and welcome to another daily recap. So today I'm going to recap day 100. Day 100, yeah, it's September 13th, 2024. So it's been day 100. I've gone through many ups and downs. Now I've stuck to one particular strategy. I think it started from day 80. So probably I should consider that as my day one. So I can't tell, like after a few more days, I may be strategy hopping. But thing here is, I know that I can hop strategy. Thing is, I must prevent myself doing so. So I think day 100 is too much for to get funded. You can get funded within 30 to 40 days very easily if you stick to a particular strategy and execute it like a robot. Day 100 is very much too long, but yeah, I deserve this because I was not consistent and I was affected by something called shining object syndrome. Whenever I see something shiny, I just follow it and I just forget to be consistent on my main strategy. So yeah, I deserve this delayed victory, but still, I just keep puzzling. Now I understood that I must not opt any strategy, and you can see like I've created a separate folder, uh, a separate playlist called September Daily Recaps, which means I will be posting only one particular strategy, uh, entire through entirely through September. So if there is any video missing in the September daily recap, which means that I have, opt strategy, and I hope and I make sure that I don't miss any video recap in the September daily recap September month. My goal for September is to be consistent and to be attached to the strategy that I just created on day 80. So yeah, without any ado, so let's jump into the analysis of day 100. So let's start with, yeah, the daily analysis. So the swing structure is bullish, internal is also bullish, whereas the fractal structure is bearish. Actually, the price has mitigated its daily demand, and then price didn't chop bullish, but still the fractal structure is bearish. And also, yeah, price has tapped into this area of supply. This okay, price has tapped into this area of supply, which is a very good POI because it has swept the lower time frame liquidity here and it has changed character. So this is a very good POI for the price to react and then push the price down. But I must also be aware that the price has reached the discount prices of this internal range and this demand could hold and then push the price up and price can move up and target the weak internal low. So you know multiple things can happen. So as per the daily bias is concerned, let's keep it a neutral bias. So jumping into the 4-hour chart, the 4-hour swing structure is bullish, internal is also bullish. The price has swept some liquidity here. This is not a valid POI as per myself, as per my learnings. So the only PO, but I can consider this weak as a POI because it has swept this buy side liquidity here. Apart from this, there is nothing here. Also, price has swept the buy side liquidity here, so I can expect the price to fall, make some bearish shock and then make an internal pull back down. But I can't expect anything, especially with this strong bullish momentum. So what I can do is I can just follow the 4-hour order flow till the price reaches this 4-hour supply. Actually, yeah, price didn't take out the buy side liquidity. It is about to take out the buy side liquidity. Thus, I can expect the price to target the next sell side liquidity pool, probably the time-based liquidities. So yeah, so this is the 1-hour chart. So this is the 1-hour chart, my medium time frame. So here you can see the swing structure is bearish, the internal is bullish. And yeah, here you can see this is the 4-hour buy side liquidity that I was talking about. And price is not yet swept it, but yeah, it is about to sweep the buy side liquidity. So if the price sweeps the buy side liquidity and if the price stops bearish, then I can look to trade the shorts using the fresh supply that was formed during the session. And yeah, also there is a ton of low resistance liquidity which would be available. I can target those low resistance liquidity also. So this is the game plan. So if the price continues to be bullish, then I can look to go with the bullish momentum. If the price shocks bearish, then I can look for shorts. So it's very simple game plan today. So at 8:59, price actually swept some sell side liquidity and then made a strong push up. So this is a good POI. Visibly, it's a very good POI to trade from with the strong protected low here. So yeah, let's see. The next session update is 9:51, and also there was an a bullish SMT divergence. So this gives me another confluence to go for longs. If the and also this is a this POI has flipped some supply to the left. So you can add confluences after confluences after confluences. So this is a very good POI to look for longs. If the price comes here, we can with full confidence I can go for longs. Price tapped here, and what are the with what condition that I can take the trade? Decided to follow the bullish order flow as it is clear that the low of the day is formed by the London. Probably, yeah, probably. Phase C, it is phase C. It is in non-OT. This box cannot be taken, and this box can also be not taken because you can see the higher time frame objective right here. The daily bias, the bearish order flow mitigated the supply sells. The bullish order flow swept the buy side liquidity sells. Both are arguing for sells, whereas the H1 is bullish order flow. So it is what it is. Sometimes you can't get all the boxes ticked. You must leave some of the boxes unticked. So only these two criteria was met. The price. This was a beautiful looking POI, and it is in line with the medium time frame order flow. Other confluences were the S&P divergence with the XY. What are the risk factors? Uh, Opposing supply daily against night time frame bias, and and this is a if the suppose if the price made some deeper pullback here, if I had taken longs here, that would be much more high probability than taking longs here because the price is still in the premium prices. So anytime the price could reverse and the price can start to come to the discount prices here. So that's one more risk factor. So having the risk factors in mind, you know, helps you to not find anything new once the trade has been placed. Once uh, once before placing the trade, you must analyze on what criteria or on what factors your trade can go against you. So you must accept that risk and then place the trade. If you don't accept the risk, don't place the trade. It's very simple. So after placing the trade, you must not find risk factors and then get the emotion called fear of losing while the trade is running in your profit. So that's why most of the players cut short their profit and extend the losses. So this is the same phenomena, but it's very simple. Just note down the risk factors, why the trade can go against you. So I got tagged in at 13:21. I got tagged in with using LC1. So this is M15 lead. So I got tagged in here and also price mitigated this M15 POI. So it's kind of taking a risk entry using M15 lead. So I just took a risk entry and then this was my break even point. If the price comes to this point, I can just go break even. That was my initial plan. So yeah, actually price took out this low, but I didn't go break even because why? Because did I go break even? No, I think no. Yeah, yeah. No, actually, I didn't go break even. Uh, yeah, actually, when the price reached here, I was not in my desk actually, so I was not able to go break even. So when the price reached here, I did move my stop loss to at this point. So, I was expecting, I took the fib level from year to year, and the 61.8% was, went from year to year, and the 61.8% was just here. So, price can make a pullback, take me out, and then move in my direction. So, I was having that in my mind. So, I just moved, but I know this was a strong low, so I just moved my stop to below here. And I was expecting that if the price goes above, then I can look to calculate the fib. If the 61.8% comes above my break even, then I can go break even. That was my game plan. But I was out due to some personal reason, so I was not able to focus on this trade. So I just left it with my stop loss just above, and obviously I took a loss. So this was a losing trade, which could have been a break even trade. yeah, it is what it is, and yeah, I just accept the loss because um, during backtesting this would have been a a break even trade, but in real life sometimes you need to accept that you can't be always on the desk. Sometimes you will miss some beautiful trades. Sometimes you can't manage some high risk trade, and that will lead you to loss. So things happen in real life. So assume that one such thing happened here. So it is what it is. I took a loss, partial loss, to be honest. So if you want to know what is the loss, actually it took break even. Fine. Think that some other trade. Okay, yeah, actually I took a break even because once the price reached here, I took 60 fib level 61.8% was above something here around this range. So I can clearly make a break even. If the price goes below 61.8, obviously it is going there is a high chance that the price will take out the strong swing low. So I just moved to break even, and yeah, you can see that the revenue is zero and it's a break even trade. Yeah, it's a good trade, but it was against the higher time frame objective, so it's a little bit riskier. So I suggest guys who are beginning to trade to just avoid these kind of trades and just focus trading in line with the medium time frame order flow and in line with the high time frame objective. So that will give you the maximum strike rate. Yeah, I know that you will get only 2 to 3 trades per month, but it's worth it. Okay, guys, that's it from EU. So let's jump into GU and see what the market has for me. Let's start the analysis of GU. So as I already told you in GU, I didn't get any trades today. So let's see what happened on GU on the day 100. So the swing structure is bullish and the internal structure is also bullish in the daily time frame. If I zoom in, you can see the price as chalk bearish, and then this is a very high probability POI from which the price can tap into, and then I can look to follow this bearish order flow. And also there is nothing to the left apart from this area of demand. So I can, follow this bearish order flow till the price reaches this area of demand. So the shorts are high probability today. So it's very simple. So within as you can see it, and you can see it within seconds that today the price is going to go down. Thus I can expect the supply to hold and push the price down as there is nothing to the left. Yeah, it's done. So if I jump, there is a zoomed in version. Yeah, this is 4 hour time frame. The swing structure is bullish and the internal structure is also bullish in the 4 hour time frame. So this is against the high time frame bias because if I take shorts, that would be against the 4 hour internal structure. But the thing here is the 4 hour has took some buy side liquidity here and it has also mitigated this area of supply. So I can expect the price to come down, but you know I need some lower time frame confirmation before concluding any direction. So that's why we are having H1 here. The H1 swing structure is bullish, mean bearish. Internal structure is bullish, and the longs will be phase C, and the shorts would be phase B because price has reached the equilibrium point. So this is the 4 hour demand in the 4 hour supply within which we are having this H1 PY. So for phase B shorts, I can look for phase B shorts, I must see the yeah yeah for phase B shorts, I must see the price to mitigate the uh, this demand. Either it can tap into the 4 hour demand in the 4 hour supply, or if the price is already in the daily supply. So if the price chalks bearish, then I can look to continue the bearish order flow, expecting the price to tap into the 4 hour demand, taking out all the low resistance liquidity. So this would be in line with the 4 hour chart. So session update at 7:58. That is 2 minutes before London. We had a change of a bearish chalk price, but the price didn't mitigate the 4 hour supply. Price is already in the daily supply, so it chalked bearish. So you can assume that the price has mitigated the daily supply and then it has chalked bearish. So this is high time to look for phase B shorts. And yeah, what is here you can see the high time frame objective, daily bearish order flow plus mitigated the supply, so sell strong sells. And in the 4 hour we can also sell it is sells because price has swept the buy side liquidity. I showed the buy side liquidity earlier. Well, I'll show you again. Yeah, this is the buy side liquidity that the 4 hour has just swept. So it can look for some sell side liquidity. So in sell side, the only sell side liquidity available is the low resistance liquidity, which the price can target. So the shorts became much more high probability after knowing all these conditions. And remember, this is phase B shorts, which means this would be counter internal. So uh, we have we are having a clear uh, higher time frame support. So one box is ticked and the price is in the OT because price has reached the premium prices. So shorts are valid and it is in line with the medium time frame order flow. Cool. And it has this POI as 4 out of 8 criteria met. How? It has swept liquidity where you can see the price has swept the liquidity and then it pushed down. And it has also made some displacement. You can see there's some fair value gaps here and it is unmitigated. And yeah, it has all it. So this itself satisfies 4 out of 8 criteria. And apart from this, it was formed during the session. So this adds more weight and it has flipped an order block. So this is the order block which got flipped and then the supply to control. So if you were not able to see the order block, this price pulled back and then pushed up. So this would be the demand zone. The price actually reacted to this demand zone, pulled back and then pushed down. So this is actually a flip zone, supply to demand flip. So which makes this POI a very high probability one. Combined with other factors like high time frame narrative and the medium time frame order flow. So this phase B shorts becomes very much valid. So what would be the entry method? But when I jumped into the M15, I didn't see any lit. So the only entry method that I can use is using M15 confirmation entry or LC2A or LC2B. So this confirmation entry would be the aggressive one, and LC2A, LC2B would be the most conservative one. Or I can use the M15 LC one, like the price will mitigate the POI and push down, and taking the trades using 61.8 would be the conservative the confirmation entry. And if the price tapped here and then pushed down, I could mark this as my lid and then wait for the price to take out that lid and then taking the trade. So that would be LC1 using M15 lid. This is more conservative than M15 confirmation entry. So what happened actually? So yeah, and yeah, one more thing. There were some other confluences and some other risk factors to be considered. So there is presence of low resistance liquidity and there is no opposing supply and demand zones. So the area is clear, so the price can come down. But what are the risk factors? Price, bearish stock could be liquidate to the Asian lows. Yeah, it can just liquidate and then it can push up. And one more confluence is that it has made an SMT with EU. So this is a bullish SMT. So this is nothing to be, this is actually a risk factor than the confluence factor. So a strong bullish rejection of the Asian low first, unmitigated 4-hour supply and non-availability of the sell side liquidity. Immediately you can see the imbalance here. Sell side liquidity is available, but price need to travel long back. So it need to create some buy side liquidity and then it can take out the sell side liquidity. So before that we are having some imbalance here which could be respected and the price can move up. So and yeah, and the last thing is opposing S&P divergence. So there was a bullish S&P divergence with EU. So chances are that this bullish divergence could play out and the price can push up. So though it looked like a high probability trade, it has these kind of risk factors which can play out against me. So having these in mind, I won't be canceling the trade in between, because I know if my trade plays out against me, it may be because of these factors. So what happened actually? Price actually invalidated the H1 supply because this divergence played out and it was just a liquidity sweep, and then it price also took out the Asian lows and then the price pushed up. So now I can look to target look to trade with this bullish order flow, but I must remember that there is this H1 supply within the 4-hour supply. So price can react anytime and then it can push down. So this could be a fake move to you know uh, trap all the buyers. This could be fake move to trap all the early sellers, and once the price moves up, it can trap all the buyers who look to chase the momentum. So this is what the market does, and this is what we must know. So after that, yeah, again, as I already told you, Price pushed up, liquidated the buy sell liquidity, mitigated the 4 hour supply, and then now it's chalk bearish. This one is much more high probability than the previous one because it has, you know, took some buy sell liquidity and then it has chalked down. A price also took the buy sell liquidity here, but this is minimum. But this is a strong buy sell liquidity, so it can continue using this buy sell liquidity. Price can continue to take all the low resistance liquidity below. So again, this is the second trade. Price made the bearish chalk after sweeping the buy side liquidity. At the same time, it also formed a bullish SMT with SMT. Then thus I can look for shorts as the price also mitigated. Okay, sorry. Phase mitigated the 4 hour supply. Phase B conditions. Higher time frame supporting the medium time frame area, yeah. In OT in line with the medium time frame order flow, and it has 4 out of 8 criteria met. So this box should be take. So this one is also a high probability condition. So let's see whether the trade plays out or not. So what are the risk factors? Opposing SMT divergence with EU and time-based liquidity. Yeah, other confluences are time-based liquidity being swept, presence of low resistance liquidity, no opposing SND, and presence of some vacuum. Yeah, this is not true. Vacuum is a news scandal, so this is not. So three confluences, additional confluences, but one, risk factor, that is, it has opposite divergence with EU, so that could play out and it could take out my stops. This is M15. So if we were having this M15 lid, so entry method was using M15 LC1, and yeah, price came up, took the LC1, and I tried to place my trade here, but unfortunately I couldn't capture the trade because this candle actually invalidated the POI. So which means that mm, the SMT with EU has actually played out, and price has actually took out the highs, take out the POI. Sometimes the SMT will play out and sometimes it does not. So I must not give too much bias on SMT divergences. But yeah, having them in confluence, provides me, some confidence. It does. So it is not the holy grail, but it gives me some confidence, and it also, tells me when not to take trades. So if you give poor bias to the S&P divergence, you could avoid this trade because there was a bullish divergence. So you could avoid this trade and then you can be risk free. So probably I would not listen to S&P divergence. So I just listen to the higher time frame bias and the medium time frame order flow. So I could have been stopped out if the price decided to make slight pullback and then push up. Thankfully, price went straight up and invalidated the P1. So it is what it is. So I just got lucky and I was not caught in the wrong side of the market. Okay, guys. So that's it from today. So overall, on the day 100, I got one break-even trade in EU and no one no trades in GU because the POI got invalidated. Thank you, guys. See you on day 101. Until then, cheers, guys. Bye.